Hey there. So, again, Karen Rands here, leading up the Compassionate Capitalist movement, bringing a whole new generation of people into the exciting and rewarding world of investing in entrepreneurs. And I'm here to talk to you about another little tidbit because what am I doing? This is all the pre-gaming of what is to come, which is the uh, Compassionate Capitalist Wealth Mastery System intro course into becoming a crowdfunding or an angel investor. And today, as I talked about yesterday, I said I'm going to cover the difference between accredited and unaccredited investors. And what does that mean? And the reason why, when you're in the game and you've been working with entrepreneurs and investors, helping investors screen companies for 20 years, and entrepreneurs figure out what they have to do to qualify for angel investors, you get accustomed to the language. And it's all new. That's like right in my book. Oh, well, now I usually have it right behind me. It's over there. Yeah. I'll show it to you so you can actually see. It's a real book, right? So in this book, I talk about, some of those kinds of stories and that kind of stuff. And I have a whole glossary that's many, many, many pages. That's all the different word language, like kind of inner secret terms that people have. And so accredited investor is one of those. It came home to me one time because back when I was running my angel investor group. And at the time, when I was rebuilding it from where it was, when I built it back up to be like one of the most active in the Southeast and in the top 50 in the country. Well, part of that was because I had a precursor to this book. I was using ebooks back when ebooks were just PDFs. You emailed somebody, and people from all over the country wanted this information, and so I had probably within like a 3 or 4 month period of time had over 1,000 people opt in to get these ebooks, and about half of those, about 500 of them, filled out my form. And my form had, what have you what are your real estate assets? What are your stock market assets? What industries do you like? I had this whole form that they had to fill out online. And I had, about 100 investors in Atlanta and about another 100, 200 outside of Atlanta that we would syndicate with on the deals that we had. And so it was fun. It brought it home to me because I had a box on there. Are you accredited or unaccredited? And I had somebody reach out to me. He was clearly an accredited investor. He had all of the financial specs for that. But he goes, is that a test? Do I have to take a test to be certified as an accredited investor? And I never even thought about that term. Accredited sounds like, accreditations, right? It sounds like getting your PhD or something like that. And it's like, no. It's just a test, like a checkbox test that the SEC put out there. That is less important now because of the openness for general solicitation to a crowdsourcing capital. It's less of an issue. It used to be because of the only way to do it under Reg D, you had a very, very small number that you could have that would be unaccredited. So it'd be like founders, or they had, technical people writing their software. They might give them some stock options and give them some stock instead of compensation, financial compensation, and so then they would be on the list as unaccredited because they were just, developers or something. And so as we've kind of gone forward with that, it's become more, it was really important back then. But the only requirement the SEC said was they had to fill out this investor questionnaire. I don't have one in front of me. It's available when you buy the book and you go to the resource portal, which is also the intro class, which is also what is being offered here for free. Okay. Then, just, if this is your first one, basically this class is coming. There's going to be a fee for it. But at this point in time, there is no fee if you sign up in advance. Do the deal.org. All right. So you would just have to fill out this questionnaire, and you would check which status, how did you become an accredited investor, and sign it at the bottom. And nobody, if you signed it, then everybody believed you. Nobody would test it. Okay. And so And that was just the way it was. Then it changed with crowdfunding platforms under the Jobs Act. And so now people had to kind of verify, they had to prove their level of income for how much to invest, because if they're not accredited, then the SEC doesn't want them to put their job is to protect investors. So they don't want them to put too much at risk because of something that is risky, but also they may not be as sophisticated as they need to be to understand it. So that was part of the whole idea when they set up the rules of accreditation back in the 1933. It hasn't changed a whole lot then, but back when the Securities Act set forth that it was so as a way to exclude people that they felt were unsophisticated when it came to matters money. If somebody had this amount of income, they must be pretty savvy about business and therefore could judge whether this deal or that deal is a good deal. That's sort of the philosophy behind it. And they arbitrarily pick these numbers. So let me tell you what that is, what all that is, so that you know for certain on this. So to be an accredited investor, a person must have annual income, an individual, 200,000, or a household or joint income filing jointly on taxes. So this is all kind of based on taxes, is 300,000 in the last 2 years. So there's an expectation of earning the same or as a higher income in the current year, right? So they've been making this money. And you think about in today's earnings, it may seem to you like 200,000 is a lot of money if you're making 75, but there's a lot of people out there. There's anywhere from about relatively speaking, there's probably around 7 million in the United States that make over $200,000 off of a W-2. That's their income that they get from an employer. All right. And then the other thing was, you're considered an accredited investor if you have a net worth exceeding $1 million, either individually or with your spouse, that does not include your primary residence, because real estate has gone up. So you could easily have a house you bought for 200 that's now worth $400,000 or 600,000 if you owned it for 20 years, and they don't want that counting towards your value. Okay, so the other one that is interesting is that if you are a general partner, executive officer, or director for the company that's issuing the unregistered securities, this only applies to unregistered securities. And unregistered securities means it's registered with the SEC as a public company. If it's not a public company, then every other company out there that is not a public company on the stock market exchange, on NASDAQ, on New York Stock Exchange, any of those kind of things, is an unregistered security. It's a private company. Okay. An entity is considered an accredited investor if, as a private business development company, organization with assets that exceed 5 million, and it consists of equity owners, also it consists that are accredited investors, and the entity itself invests. So like, for example, a venture fund, right? A venture fund automatically checks the box as an accredited investor. So that, but you can't be, like anytime there's an angel group that forms a special purpose LLC, they're all accredited investors, so they're investing as accredited investors. So that's sort of the big, and there's also a fast fact that they now have a new designation where if a person can demonstrate sufficient education or job experience showing their professional knowledge of unregistered securities, they too can qualify to be considered an accredited investor. So that's pretty amazing. So that means like somebody like myself, who may hit it on this or on that, would be considered an accredited investor. But I typically lean towards the financial model, because it's really, becoming an accredited investor is not that hard anymore. So what you really want to look at is liquidity. And so what is the liquidity, the ability of that person to invest? And so I always advise entrepreneurs that even if they have, If they have somebody that's in their family that technically would qualify as an accredited investor, but they only have a little bit of liquidity, unless they're planning on getting started in investing in your company and a bunch of companies, one of the biggest mistakes investors that are new to angel investing make is that they invest one and done. You cannot invest one and done. You have to have a strategy that says you're going to build a portfolio over time, because that's right. So you don't want to if they only got enough money to make one investment, and even if they love you, I would only take their money at the end, like closer to the end, when I validated my business in such a regard that I could get a business angel to come in, and maybe I get accredited friends and family people to come in. Then I would then go out and then I might take my Aunt Mabel's money, because I knew I saw the finish line. I knew I was going to be able to get there, because one of the biggest things that I teach as a risk factor in evaluating companies is their ability to raise all the capital. That's one of the reasons why business angels require entrepreneurs to have raised a friends and family round. They want to know that they have the ability to raise capital. And so with that, that's the difference between accredited and unaccredited. 506B, it's an investor questionnaire, you just sign it. But in a 506C, crowdfunding, we talked about that yesterday. In the crowdfunding space, you have to prove it. And that's what gave all those things that I described. See, so people that they're wealthy without a W-2, they just have income from their investments, or they have a huge amount of investments that they're living off of. They don't want to disclose that information. They like being private. That was part of the perk of being private as an angel investor. You just had to sign this piece of paper. But if you're going to go into a 506C, you have to prove it. And it's really not much different than applying for a loan. You have to show your tax returns and things like that. But they gave it an exception to that said you could get your lawyer, your accountant, or a financial advisor, somebody who has a license, that would lose their license under fraud and go to jail if they fraudulently said you were accredited and you weren't. They can sign a piece of paper, and then now there's clearinghouses where you can register that with, and you don't have to do it with every company that you're doing it with, but that you're investing in. But that's that way under Reg A Plus and Reg CF, and I think even interstate, but it varies by state. You just test as to what your income is, and if it's and so it's just easier sometimes to say I make less than 200,000, and so I'm limited to 2,000 in this particular deal. If you wanted to put 20,000 into a company, then you would have to prove that you were an accredited investor. So there you have it. Don't take a test. Just figure out what your assets are, what your income is, and in the intro class, we talk about figuring that out. I have a tool that comes with the book when you go and register on the portal, that helps you figure out your ability to invest and how much to invest, and do you qualify as an accredited investor. So with that, onwards and upwards. See you the next time. Sign out.